Okay, let me know if that's all right. Okay, so if you want to start now, let's go ahead. Hello, everyone. This is Kathy Lien with our non-farm payrolls preview. I thank FX Street for inviting me this morning to talk about non-farm payrolls. Let me just kind of set my screen up. Yeah, I thank FX Street for inviting me this morning to talk about non-farm payrolls, because non-farm payrolls is the most important event risk of the week. It's generally the most important event risk on the calendar, but this time around, it's even more significant because the market's trying to figure out, is there enough justification for the Federal Reserve to raise interest rates in December? And it won't just be this non-farm payrolls report. It'll be the next 3 non-farm payrolls reports that carry increased significance. With regards to non-farm payrolls, last month was a huge disappointment. So in order for a December rate hike to be on the table, the Federal Reserve needs to see non-farm payrolls be strong in September, October, and December. We will get 3 NFP reports before the next FOMC meeting, and not the next, before the December FOMC meeting. Now, today's webinar is about trying to handicap what non-farm payrolls could come out as, but it's always important to put it into context. And you can see from my Bloomberg screen here that the market already expects a stronger number. They expect non-farm payrolls to grow from 151,000 to 171,000. And that's actually kind of a modest expectation, only a 20,000 increase. They expect the unemployment rate to remain unchanged and average hourly earnings growth to slow. From a non-farm payrolls perspective, the fact that they're only looking for a modest increase suggests that there's a huge room for surprise, because we could easily hit 200,000. But of course, whenever we look at non-farm payrolls, we look at the change as well as average hourly earnings. And the market is kind of ambitious with regards its expectations for average hourly earnings. They're expecting a very strong improvement in average hourly earnings from 0.1% to 0.3%. We also have a November FOMC meeting, and there's a small minority who believe that the Federal Reserve could raise interest rates in November. I think it's zero chance of that happening, but non-farm payrolls on Friday, tomorrow, will contribute to those expectations. So I do believe it's important to watch. It's always something that we pay close attention to. Now, obviously, the US dollar is very strong right now. If you take a look on the right-hand side of my chart, the dollar is dollar yen is trading very close to 104. It's kind of rejecting 104 a little bit right now because it's come, very far, very fast. If you look at the daily chart, you can see dollar yen had 1, 2, 3, 4, 5, 6, 7, 8 straight days of gains, or 8 days without a pullback. And the last time we had this was, let me see, 1, 2, 3, 4, 5. Nope. 8 straight days of gains. What's the last time we had this? 1, 2, 3, 4, 5, 6. It's only 7 days. This was a very long stretch, of course, but there's 1 day of a pullback at least. 8 straight days of gains. This is definitely not the case. Maybe somewhere over here. 1, 2, 3, 4, 5. Nope. Let's see. I'm doing this because I need to look at it from my own daily note too. So we might as well just do it together. So at least since 2014, we have not seen 8 straight days of gains. We're now in 2013. Still no 1, 2, 3, 4, 5, 6, 7, 8. This is not 8 straight day gains, but at least 8 days without a pullback in May 2013. But let's see, 8 straight days of gains. Where are we seeing this? I don't see it anywhere over here. 1, 2, 3, 4, 5, 6. Nope. 1, 2, 3, 4, 5, 6, 7, 8. Kind of like in October of 2012, although, there was one day of unchanged price action. I'm just going to give another. Here we go. I mean, this is a very long stretch. 1, 2, 3, 4. 1, 2, 3, 4, 5, 6. Still not 8 straight days of gain. So, I mean, we literally have not seen. Here we go. 1, 2, 1, 2, 3, 4, 5, 6, 7, 8. All right. March 2011 was the last time we saw 8 straight days of gains. And that lasted for 10 straight days. So it's been, at least 5 years that we haven't seen an uptrend as extended as the one we've seen in dollar yen. Now, of course, all of this is building up into the anticipation that non-farm payrolls is going to be strong. So as a result of that, we could potentially see a further increase, especially if non-farm payrolls is very, very good, where because we're already above the 100-day SMA. So since we're already above the 100-day SMA, the resistance is at 104.32. So we could get there if non-farm payrolls is good. But actually, what I kind of fear is that, trade may just be the non-farm payrolls pop. It'd be, buy the rumor, sell the news, and dollar yen may actually end up, reversing afterwards because, so many people have already been in the long dollar trade. So I'd be a little careful of that because I do believe that there's a trading opportunity here, but the trading opportunity itself may be relatively short-lived and maybe more of a proactive than reactive trade. Now, every single month, we look at 8 leading indicators for non-farm payrolls. They include non-manufacturing ISM, ADP, manufacturing ISM, challenger layoffs, jobless claims, consumer confidence, continuing claims, and the University of Michigan Consumer Sentiment Index. So let's take a look at how these numbers fared. First of all, we had jobless claims released this morning. And let's take a look at the 4-week moving average of jobless claims. So 4-week moving average of jobless claims drops to 253,000 from, I guess, when we last released, it was September 2nd. So it would have been so basically the data that we would have gotten is probably August 27th. So 263,000. Continuing claims also drop to 2.05 million, which I think is the lowest level we've actually seen. Which is actually the lowest level that we've actually seen this measure. Sorry, I want to pull this up on a chart. The lowest level that we've actually seen this since, so that's not what I wanted to do. Let me reset this whole thing. The lowest level that we've seen jobless continuing claims since 2000. Let me just make sure that usually Bloomberg will fell almost to the lowest level since 1973. Continuing claims dropped to lowest since 2000. So 2.05 million, lowest since 2000. I'm just noting that almost since 1973. So jobless claims and continuing claims have been very low. And so they're both very much consistent with a stronger non-farm payrolls report. Challenger Gray and Christmas reports a 24.7% drop in layoffs compared to 21.8% the previous month. So, all three of these measures suggest that we're going to have a strong non-farm payrolls report. And let's take a look at the other measures. So non-farm payrolls were released on the 2nd. So we'll start with Labor Day. So taking a look at this, you can see that, let me just kind of sort this so it's easy for me to pull up. ADP. We have ADP is actually lower, 154,000 versus 175,000. Consumer confidence jumped from 101.8 to 104.1. ISM non-manufacturing index 57.1. The employment component of that index actually rose to its strongest level since October 2015. And ISM manufacturing, the employment component, also saw a very strong rise. And then lastly, the University of Michigan Sentiment Index rose to 91.2 from 89.8. So all signs point or suggest that we're going to see a good non-farm payrolls report. The only exception was ADP, but 1 out of 8 measures is definitely something that tells you that we could have a very good number. So that plus the fact that there was an improvement in weather that probably brought back 50,000 jobs, we have a very strong case to believe that non-farm payrolls, which expectations are really not that high, we have a very strong case to believe that non-farm payrolls is going to beat expectations. And I definitely think it's a worthwhile trade to take and consideration to make for non-farm payrolls report, because we do believe that it could be very, very strong. Now, where do you buy the dollar? The dollar is obviously very overbought. And, I really, like I said earlier, I really don't, quote unquote, see a trade to the, I don't really see a trade to the short side. I think, in this case, we have overwhelming arguments that tell us non-farm payrolls is going to be good. And so the trade really is to buy dollars. So dollar yen obviously very overbought, touching the 100-day SMA. Dollar yen itself, you can get around 103.50. That's probably a good trade. Maybe the better trades in this case would be euro dollar, for example, selling around 112 if you're given the opportunity. Pound still in a relentless downtrend. Maybe if you get a rally at this stage to 127, perhaps that could be a good sell as well. We obviously have Canadian employment numbers. Dollar CAD really tearing upwards. I've been watching oil this morning, and this is obviously kind of a risk-off mode because oil is up quite a bit, and that suggests to me that dollar CAD should be trading lower and not higher, but clearly this is a result of US dollar strength and nothing else. My preferred trade is really to sell Aussies. I think the risk is clear, which is today's high, and I think that we could see this down to 75.20. So that's basically what we're looking at with regards to non-farm payrolls. Now, it's also important to be cognizant of the revisions because that's going to be very significant. One thing that I do want to point out to you is, let me remove my lines. I do want to show you that the last time we had non-farm payrolls, which was on September 2nd, it was a very, very weak number. Softness all around. So let's just go to September 2nd. So flipping forward to September 2nd. And you can see, let's just pop over and let me show you this. Change in non-farm payrolls was 151,000, which is significantly weaker than expected. Average hourly earnings growth slowed materially. Unemployment rate did not improve like everyone anticipated. Average weekly hours dropped. So every single one of these components told us that the number is negative dollar. But look what happened. The dollar did drop and then it popped higher. And that was on September 2nd. And that's the possible by the rumor, in this case, sell the rumor, by the news type of price action that you can expect, given how much dollar yen has moved already. So the real trade, I think, is the proactive opportunity, and I think that's really what we're going to be focusing on. So with that, I'd like to open up the floor to any questions you may have. Any questions? Does anyone have any questions about non-farm payrolls, how to trade it? We're going to be live trading non-farm payrolls. So if you follow my Twitter, there's a link to register for it. So if you're interested, you can certainly go there and register and actually, participate in this event live with us. And my Twitter is Kathy Lien FX. Okay, so it looks like there's no questions. So I think that's it for me this morning. Thank you so much. Give you guys another second to think about your questions. Okay, so I'm just going to say goodbye, and I want to thank you all for joining me today.